next we are going to talk about a personal finance topic. And I think, Gerry, this is something we've only talked about very roughly, you and I together. So I'm interested in your reasons. But as people are trying to get their affairs in order for the beginning of the year or the end of the year, however you want to look at it, because based on my calendar, the beginning of one year is the end of another. So I don't know.
Funny how that.
But yes, it does work out. It's a circle of life. But Gerry, life insurance. If people depend on you, you need life insurance. And we're not life insurance brokers. I've had a life insurance license in the past. Wasn't something I ever made a ton of money on. You have some, what I think, based on what I've talked to you about, you have some counterintuitive thoughts on it. Life insurance, I think.
The age-old investment person's argument is buy term and invest the difference and avoid whole life insurance. I don't buy into that. I do think that for a young person, because risk avoidance is the most important aspect of insurance for a young person, then term does need to be a component of it. So, for example, if you're a father or mother of a young children.
Let's say six. Let's say you have six kids, Gerry.
You have six kids like Doug.
Yeah.
You absolutely need to have, life insurance, especially if you're the primary breadwinner. And my rule of thumb is I want to create if horrible happened, I should meet an early demise. I have kids and a wife, and I want to make sure that I'm setting them up. Not just, I don't want them to be in a position where they just a common rule of thumb is, get life insurance to pay off debt like a mortgage and what have you. No, because that's not a smart thing to do. But what I do want to do is allow them to have a pool that will be able to generate a close approximation, not necessarily, depending on how affluent and how well you've done, not necessarily suggesting you have to replace every bit of income that you have, but a reasonable level of that income to be able to be replaced with a pool of money. So when you're young, term life insurance is very cheap. All life insurance is cheap relative to when you get older, obviously, and you take more of a risk that you might end up with some sort of pre-existing condition that precludes your ability or limits your ability or maybe erases your ability to be able to even get life insurance. So you want to make sure you've got enough term life insurance to replace, at least a good portion. And maybe a rule of thumb is, pick a number between 50 and 75% of your current income. But we're also big proponents of whole life insurance the younger you are. And you might say, well, why is that? Because aren't you putting that money into the black hole of the insurance company? The answer to that is yes, you are. But you're also generating a permanent asset that has a certain amount of leverage to it. I mean, if you buy whole life insurance and you die tomorrow, if you buy any kind of life insurance and you die tomorrow, you die tomorrow. You buy the life insurance, you die tomorrow.
Well, you buy the farm tomorrow.
You buy the life insurance and then you buy the farm tomorrow. The leverage that gives you is far more than any investment could ever give you. Okay, and that continues to be the case over time, even though by definition it decreases. As the more you're paying in premiums, the less that leverage is, but it's still leverage. There's a reason why you can go out and probably, search online for articles. There were some good ones over the years about Warren Buffett's belief in whole life insurance, and I have plenty of issues with Warren Buffett, but that one I agree with him on.
Perhaps the only thing you agree with Warren Buffett.
One of the only things. That's not totally true, but anyway, why did he have so much whole life insurance? Well, it's permanent. It doesn't go away. It lasts until, Charlie Munger died at 99. His life insurance paid off. Term life insurance, by its definition, goes away.
Well, he had 75-year-old kids who were still depending on him. So,
yeah, really. The permanence and definition of whole life insurance is important. The other thing is it sort of doubles as a kind of alternative asset class. In that as you go on or you go along, the premiums are always there. So it's perceived to be expensive because they're much higher premiums. The younger you are, the lower they are. So it's valuable to get involved earlier in your life because the premiums are more palatable. But what's happening is after a few years of and I'm talking about with you need to be with the reputable firms, the really good firms. And by the way, as Catholics, we have the Knights of Columbus. Knights of Columbus were put together for the very purpose of providing insurance for the
Knights of Columbus put a hole in my arm because I needed more insurance today.
Life insurance from Knights of Columbus.
Yep.
They were created for the sole purpose of building a pool for the widows and orphans of the miners in, I think, Pennsylvania. They are probably one of the best, if not the best, life insurance companies out there. You do have to be a knight to get it, but excellent. They're very, very well run. Great experiences with returns. If you're a knight, definitely. I mean, if you're a knight, you have the insurance. That's just all there is to it. Another really good one's Guardian. There are other good ones out there. And I definitely tend to lean more heavily towards the mutual life insurance companies as opposed to ones that are publicly traded. Just a little better cost structures. Anyway, but you want to make sure you're getting a really good. There is a difference in a well-run and well-organized and well-managed life insurance company, because you are putting your money into that black hole. They're investing it, but they have, it's actually a beautiful business. I've thought about it many times. It's like, gosh, I wish I could be in the life insurance business, because they truly have a long-term investment perspective, and they're investing in everything, real estate, stocks, bonds, whatever. It's a well-diversified, well-thought-out strategy. And if it's well-managed, the dividends that the whole life policy pays are very good and consistent. And it is alternative to what we're trying to do on the growth side of the equation, in that it tends to be, it's there in difficult times. And I look at it, especially after you get past the first few years on a policy and you're continuing to make the premiums, it's really just a savings account. And, it used to be called, the life insurance sales guys would call it, forced savings, because people don't save on their own. And you know what? That's actually true in many cases. A lot of times the only thing people have are their 401k and the cash value in their whole life insurance policy, as sad as that is. We obviously advocate for not just doing that, but nonetheless, that is a valuable tool. You can borrow against it, and the cost of borrowing, because you're still getting dividends while you're borrowing, is much less than when you're out borrowing in other ways. So that savings aspect of it is there, because as time goes on and that cash value builds up, if you need to use money for whatever purpose, you can go in there and just do a policy loan. Check with your tax advisors to make sure that everything is, all squared away as far as the taxability. It shouldn't be taxable for most people. As the policy ages and so much cash value builds up, there could be some tax implications if you take a loan. But big proponents for a younger person of a combination of whole and term. And then as you get older and you don't have the same responsibilities with a family, I'm in this right now. I still have term insurance. It's still, not quite run out yet. I think I did like 20-year term somewhere back, and maybe it has 5 to 10 years left. You can let those lapse. You rented insurance for X number of years because you had the risk, and you wanted to make sure you didn't. But then you have adult children that are out working and doing their own thing. You don't need that anymore, but you keep your whole life because it's permanent and it's there forever.
All right, Gerry, I have some thoughts on this. Okay.
Yeah.
So, and since I have a hole in my arm from an insurance test today, I get extra weight for my thoughts. But I have whole life too, and term. I would say stream of consciousness, a couple things. If you look at compensation for wealthy people, the research I've done indicates you'd be surprised at how much life insurance factors into their compensation and benefits from work. So consider that. Number two, people like to poo-poo on whole life insurance. I think a lot of that is due to overzealous whole life agents making overly bold, audacious claims about life insurance returns. Don't compare it to the stock market. It's different. It's more conservative, I would say. Number three, if you're concerned about what to get and you have young people, the young people depend on you, and a spouse depends on you. Don't overthink it. At least go out, get term. If you're married and you have kids and you're not independently wealthy, you need at least term insurance, and you can get it for, probably $100,000 worth of coverage. It costs you probably $100 a year. So most people, most wage earners will probably need upwards of $1 million. So you're looking at $1,000 a year. That's perfectly reasonable. And so don't overthink it. Don't spend a lot of time looking at what Dave Ramsey said about a whole life insurance versus what Gerry Frigon said. Just go get your term, then investigate the benefits of whole life insurance. Because
also need to emphasize that when it's it doesn't need to be the whole life versus term. They go together depending on where you are in your life cycle. And you're right about the experience of returns on the whole life policy. But again, I'll emphasize it matters who's the insurance company. There's also this hybrid known as universal life. And we would avoid that because those are where a lot of those hyper sales type things come in and say, oh, you can earn have an index to the S&P 500 and earn a higher return. And isn't that great and wonderful? And most of those illustrations, they virtually all run out at a point that's not permanent, really. It's this hybrid. Stay away from those kinds of things. Keep just pure, basic, simple whole life that you can add riders like long-term care insurance riders. There's all kinds of tools that you can use. You can have like terminal life riders where in an unfortunate situation where you might be diagnosed with a terminal illness, you can access death benefit. There's all kinds of things that come along with the whole life that make it beneficial. And I think it does. It needs to be an important part of every financial plan. And I'll leave you with, there's a reason why the wealthiest of the wealthy people have whole life insurance. One last thing though, when you talk about overzealous sales from the insurance side of the equation, probably one of the places where whole life insurance, I think, has been most maligned, rightfully so, is in these second to die scenarios that are out there. The insurance industry tried to sell this whole thing about second to die. You buy a life insurance policy and it's cheap because it pays off second to die. It's exact opposite of what you want. You want first to die. You want to get that big leveraged pool of money that comes from a life insurance policy at the first death. But artfully designed in a good estate plan, life insurance actually also becomes important when it comes to estate tax payment and how you structure that. So we won't get into that today because that's for certainly, it's a much more, it's a wealthy person's problem or issue, and it's much more in depth. But those are other reasons, other parts of the equation. And again, I just emphasize there's a reason why wealthy people use whole life insurance. So that should tell you something. And most insurance wants to sell you the term. Why is that? Because it's...
I know. I have an answer. Isn't it that like 99% of term policies don't pay out?
Correct. It's a boon to the insurance company. It's an absolute boon. You're renting, and they want you to live for that 15 years, and they get nothing but premiums and never have to pay a dime. Anyway,
and I will say this: if you're looking for Gerry's life insurance license on the wall behind him, you won't find it. So he's giving you. He's giving sincere advice. He doesn't sell life insurance, so he has nothing.
Sell any kind of product.
So, well, we are going to put a bow on the insurance. Again, in summation, if you have people who depend on you, you need some insurance, and you need insurance that's going to make sure they're going, not just checking a box. If you've got a wife and kids, $100,000 of insurance is not going to go very far. So you need enough insurance. Make sure you get the need covered.